Hey everyone, my name is Nathan Bird, founder of Acquisition IQ Network, as well as Aquacon, a conference coming to Salt Lake City on September 3rd. We're excited to have Bronson Kaufusi here talking about taxes, as well as some of his knowledge in that space. You know, Bronson Kaufusi is a former NFL athlete who played with the Ravens, Jets, Packers, on the defensive end and tight end, but also now he's transitioned into business using his same experience for competition within the NFL, and now is a trusted advisor to pro athletes' family offices. He specializes in tax strategy, real estate, business growth, blockchain, and helps lead a Harris Investment Group through strategic investments and relationships. Thanks a lot for joining us today on the podcast.
Yeah, thanks for having me. I'm excited to be here.
We're going to jump right into it. Why are you an entrepreneur?
The challenge.
Yeah, the challenge.
I love the challenge. It's something that I haven't really felt anywhere outside of sports. Then, entrepreneurship is a challenge. You're growing, you're moving, you're chasing something, and it's way bigger than yourself.
It's interesting, those that have that personality that really you want to jump into a challenge as opposed to stray away from a challenge. I believe that's what athletes have. And, as business owners, we're athletes as well.
Exactly. So true. Especially when it comes to mindset. Like the mental game of an athlete and the mental game of an entrepreneur is the same, because I would say like the most common characteristic that we share as athletes and entrepreneurs is the fact that we can handle adversity. We can handle when things don't go our way, when our back's up against the wall, when you need to figure out a way to get something done. It's just, getting gut punched and still moving forward. Yeah. Like that is entrepreneurship. And it's the greatest thing ever.
Well, it's interesting because you can dig deep into your experience from, having, you went through that ankle injury and then you built up resilience through that. But then you've got business owners that you're constantly talking about and helping them walk through the value creation within their business, but there's going to be adversities left and right throughout that entire process of value creation, and then a maximal exit, correct?
Yes, exactly.
So let's walk through some of the things that you've gone through and the businesses that you're working with to help them with increased valuation if they come to you and ask, hey, I'm ready to sell my business.
Oh man, there's so many different things, but what I like to focus on are like what's tangible right now, because as an athlete, that's how I view things. I need application now. And so I think number one, when I tell people, when I'm talking to these business owners, it's end in mind. Shout out to the Coveys. Begin with the end in mind. Why is this important? Because your efficiencies will go up. Everything about your business will go up. And one of the most important things that a business owner can do when they're like, hey, I'm trying to increase my valuation, how's your data room right now?
Yes.
Is it built? If I am coming to look at your business to buy it, can you give it to me right now? And what's also interesting is not enough people are telling people that their business is for sale. Even though they know they're not going to sell it for a little while. But if I'm telling people it's for sale, guess what happens to the person across from me? They start telling me some things that I need to do to change my business to build the efficiency and to build. And what happens is when you start telling people, a lot of business owners, I've seen this a lot, but a lot of business owners, they'll, when you're having this conversation and they'll go out and they'll start becoming really efficient, they pretty much replace themselves, but their company grows. It is crazy. And now they don't want to sell because they're at this point where they're making so much money because they just became more efficient because the mindset changed.
EIM.
Yeah.
End in mind.
End in mind.
There's interesting things. Like you had a goal in order to play professional sports and it began at a very early age, correct?
Yeah.
And I feel the same for you. You had to write your goals, mission statement, how you were going to achieve whatever that goal was. And that was the end. The end goal was NFL. You know what I mean? And you've got these business owners that are looking at the end of mind, because my question to business owners is, why are you in business?
Yes, that's exactly right.
Like, why are you in business?
That's the X and exit right there.
Is it to work yourself to the ground? Is it to provide for your local community? And, because there's different definitions to what type of businesses that people are creating. I'm sure you've probably seen it before.
Yes. And that's like, so the acronym, right? EXIT, ended mine's the E. X, right? X factor, or the X factor truly is explain why. Why are you doing this business? That's probably the most common question, one of the first questions that people want to know when they're looking at your company, because that's where the passion is. That's where the energy comes from. That's where what are you going to do when all the crap's hitting the fan?
Yeah.
Explain why. And if you can do that, I mean, and that's where the storytelling skill comes into play with your business and all that. But it's like so important. What you just said is so important. You need to know why, and not just know it. You need to be, as a business owner, you have to be able to explain it and communicate it. Because as a business, if I'm coming to buy a business from you, I need to know what makes you tick. Explain to me why you wake up in the morning. Because I am pretty much coming into it, and we're going to build a partnership 100%.
Yeah.
And we're going to, depending on the strategies that we decide on, but like we're going to have a partnership moving forward. And when you're able to explain why, a lot of trust is built immediately.
At our previous AquaCon conference, one of the speakers spoke on the speed of execution is dictated by the trust or the level of trust.
Yeah.
If you and I only have a 50% trust, we're going to move slower. Because slow. I'm going to not 100% trust, but if I trust you 100, then we're going all in and we're going to figure it out, that type of deal. And because there's a certain sense of unknown in the future, but if you do trust, then you're going to be able to figure it out. It's interesting. We're talking to somebody yesterday, and we'll get into taxes. We'll get into all the things, guys. Don't worry about that. Was talking to somebody yesterday about the interview process and how they interview the intake of their new hires. And a lot of times you'll see in companies, they start asking robotic questions like, when was there a moment that you were stressed and how did you figure it out? That type of thing.
Yeah.
As opposed to, what was your life like at home as a young kid?
Yeah.
What was your relationship to your parents?
Yeah.
And that'll give you all the data you need, really, because those are your most primitive years that start to grow who you are and the character that's established, and then you can start to because it's interesting, right? Because if we're going to be doing a transaction with a business owner, it's these questions that will help to dictate our decisions, and we're able to identify whether we want to move forward or not based on the interpersonal relationship. And it's not just the transaction. Because who wants to be in a transaction that is going to be less than optimal based on that level of trust that we have? And it's only to get to the number. So interesting perspective.
That's the I in exit, is identifying people, advisors, because it's not, this is what people get confused, right? It's who, not how, which is a book a lot of us have read. Who, not how. I can do anything with who. I truly believe that.
Yep.
I can do anything. We can go win championships in sports.
We can go fly to the moon.
We can fly to the moon because who we got. That's why. And it's like having that mindset of who is literally a game changer. And even in business or on the exit side of everything and selling your business, and just who is in every piece of the business. From ideation to creation to getting that valuation, selling it. Who? Every vertical.
Yep.
Who is there? Yeah. And that's why you have to put a lot of energy, like you just said, into figuring out who.
You got to decipher, you got to find red flags, and immediately understanding the psychology of the human and their incentive chain is extremely important. I mean, that's first principles, right?
So important.
Understanding the incentive chain. And, who has the resilience and grit to be able to go through the difficult times, just like what you were saying. So, guys, we just been talking about obviously value creation within a business. We're talking about interpersonal relationships, as well as now we're going to get into some tactical approaches to one who's wanting to sell their company and how we can leverage tax strategies, which you speak very highly of based on your own personal experience. But quick, before we get into that, why the tax strategies? And have you had a personal experience of being able to, one, save maybe money or make money through that?
Yeah, definitely. So why? I didn't grow up. So my background, I didn't grow up with, I didn't grow up in a family where investing was the talk of the dinner table or money talk, we were just trying to make it, month to month. And I come from a family of 5 kids, and we all play sports. We're all in everything. So it's tight, right? And so my first experience with money was when I got drafted into the NFL. And what happened was, and that just, the NFL draft just happened, right?
Yeah.
You literally, just so people, know what's going on the business side of this, you get drafted, you get flown out to the team, you sign your contract, put in your bank information, signing bonus wired, boom, overnight. So you, like, first round draft picks that just got drafted, multimillionaires.
Yeah.
Overnight. But on the business side, what is that? That's an exit.
True.
So I am always trying to help NFL athletes understand that you have to be able to view this like a business owner. Okay. End in mind, right? X factor, explain why, right? Identify your people. Advisors.
Who's in your corner?
Who's in your corner? And then T is for taxes, right? Exit. Now, for me, I didn't have anyone. Fortunately, I had a mentor reach out to me who connected me with his financial team, right? And that was great. But the tax side, I didn't get to the tax game until around my second year. And as an NFL player, you're W-2, which makes it even harder. So for me, my exit, right, was, okay, I got drafted, I got a signing bonus, and now I missed that opportunity, but moving forward, I'm going to literally play this game at a higher level. First, I'm going to educate myself, ask the people the right questions. So I started talking to elite tax advisors for family offices and large M&A firms, and that was back in like 2017. So I started learning a lot of strategies. But if you're not hungry, curious, you're not going to know this stuff. And so, because it's not just out there, you have to go find it. And so for me, that's what changed it for me. I started to learn all about, the first sleeve I went down was using real estate to offset my, taxable events, liquidity events.
Well, because you're a W-2, so you needed to establish your own entity. So then you could not be a W-2. So you're taking your W-2 and then investing from your entity into other, okay, got it.
But for me, I was using real estate and using the depreciation play, the depreciation benefit, which for those who are listening that don't know what depreciation means, it's a phantom loss. And when you invest in real estate, pretty much the government is going to reward you by giving you a tax benefit. And so you run a cost segregation analysis on your real estate, and then it kicks off these tax benefits or the depreciation, the phantom loss. It's not a real loss.
Let's just step one step through that, and then we'll go 2 and 3. I've got 100,000,
okay,
and then I'm going to invest in real estate.
Okay.
What will I see? Obviously, there's percentages, and it probably sways, throughout the years. But what will I see a benefit from that investment?
Okay. So
for taxes.
So I'm going to go at it from, if the Tax Cut and Jobs Act, if that gets re-put in this year, and bonus depreciation comes back to 100%, I'm going to talk in those terms.
Okay, let's
for
do it.
Best case scenario, right? Okay. So depending on the type of real estate I go into, all right, I'm going to go into a strategy that's like hyper niche, which is oil and gas on the gas station side.
Okay.
So You put your 100 grand into a gas station, okay? That 100 grand, all right, when I run the cost seg on this gas station, I'm going to get a lot better tax benefits because if over 50% of the revenue comes from the pump versus the convenience store, okay, which is all the beverages and food in there, right? Now the depreciation schedule for that gas station is even better than going into like an apartment complex because it's seen as oil and gas. So what this means is that 100K that you just put in, okay, on the tax side, right, it's going to create, and this is if bonus is at 100%, right, it'll do over 200,000. Now what makes it even more attractive is it's going to cash flow at 6 to 9% annually, maybe more, with a 75 bip escalator annually. So you get cash flow, you get tax benefits. Now that depreciation, well, I should go back one step.
Sure.
Where's the cash flow coming from? It's a triple net lease with an operator. So the operator's going to come in, right? They're bringing their own CapEx budget. They are paying you a triple net lease. And then what happens is, the best part about it is there's also an exit at the end. And I'll get to that point. So, but it's hard to find things that cash flow and create tax benefits that you can use up against W-2, capital gains, 1099. It's really hard to find that. And so moving forward, right? I get the tax benefits, I get the cash flow, okay, but how do I take those tax benefits and use it up against active income?
Yes.
Because right now it's only going to go through passive. Well, I have to claim what's called the real estate professional designation. Now, for a lot of NFL athletes, I can't claim it because I'm an NFL athlete, but my spouse can claim it. So I need to own some type of rental real estate, and my spouse can claim it and do 750 hours of real estate activity, material participation, and over 50% of my time, her time is there, or their time, whoever it is. And now all of that passive loss, over 200,000, when it comes to your K1, it's going on the passive lane, but because you check that box on your taxes, it now goes down W-2 at the active channel.
Interesting.
And that's why when people call, like, that's just one strategy. Now, this is just one. There's a lot, but this is one that's really strong that people like because it's like, okay, I'm going to be selling my business for X amount. I'm going to be paying this. And this goes back to the whole end in mind.
Yep.
People that are selling their businesses need to be planning in advance. And when they, I'll get calls all the time. Hey, can we go over a gas station strategy? Can we go over, mobile home parks, insurance? Like, there's so many strategies out there. Solar credits, like there's energy credits, land easement. There's so many. It's like, let's plan now, and then let's execute. Now, sometimes people are ready to execute, but they didn't plan. Mm-hmm. So their plan isn't really that good. And so, but they're ready to move now. Yeah. But it's like, whoa, we have to plan over here. Like I had a business. So Q4 is always crazy in the tax efficient investing space. Q4 hits. People are, man, it's crazy. Like it just gets crazy. And people are about to sell their businesses in December. And I'm like,
like, don't do it.
Don't do it. Move to January. Yeah. Like, let's do this in January. Let's plan right now, but let's move. So that way, because exits don't happen all the time. You don't go to the NFL all the time. Like, you really need to identify your advisors. You need to really be hungry to learn and understand and just talk to people. You don't have to sign the dotted line and feel forced when you go in to talk to people for tax help.
I've interviewed so many business owners and also M&A professionals that say, well, the business owners are different than the M&A professionals. Actually, the M&A professionals are all about preventative maintenance and planning 3 to 5 years in advance. That's all they say that, Yeah. The CFOs, the lawyers, everybody. And then you too now as a service provider that's helping those small businesses. And
that's true.
I wanted to go back to, I want you to succinctly list off maybe 5 different strategies that people can learn from you. I mean, don't go into detail on each of them, but you did say a few, and I just wanted to make sure it's really clear. So you've got a gas strategy.
Oil and gas, which goes into gas stations, gas equipment. Yeah, I mean, the oil and gas
play is a really good one.
It's a really good one. It's a good one.
What's next?
A lot of people use that. Okay.
The mobile home
You
park.
can do mobile home parks.
Yeah.
I mean, commercial real estate, they're pretty much the same.
Commercial real estate.
Yep. And that's strong.
Is there a multifamily
Yeah,
play
you can
here?
do multifamily. And
Okay.
but back to the gas stations.
Yeah.
You can 1031 a gas station into multifamily.
Oh, geez.
So this is what, you just keep winning. This is the thing. When you get to this point, you just
keep winning.
Keep on winning, okay? Okay, so some more stuff. There's like fee simple land easement deals. If you have an appetite for that, that's usually like a one to, like you can put in around, I think it's 33% of your income into it, but it'll produce a 6X. But you have to make sure your operator is high level. Like they need to be one of the top in the country. So,
well, I'm sure you know who are some good operators.
I do know some great operators. Happy. I'm an open book. I just love helping people win. So I can reach out. I will tell you all these people. Literally easy. Solar credits. Mm-hmm. So the whole energy credit place, their area is so unique. And there's something even more unique about that space is you can do the clawback. You can use these credits to go back 3 years. I don't know how long that's going to last.
Yeah.
I don't know, but that's something interesting that you can go down. And once again, all of these strategies, it comes down to the operator. And so I've spent a long time trying to find the most elite operators that family offices trust.
Okay.
Because they're the ones, like their teams, they are so in depth. And if they are already doing deals with these types of operators, then okay, I feel like I can trust these guys. Like
at my family offices, is that one of your big focuses is helping to route, and introduce and be able to present operators that really meet your criteria and then would meet these small business criteria?
Exactly. That's exactly what we do. But we come in, so on that side, on that business, right? That business is an a la carte, flat rate, non-AUM.
Okay.
Business. So when people, if they already have wealth and they want to create their own family office structure, they can use, and that's another one. Creating a family office is the most tax efficient vehicle in America. That's what we message at My Family Office Partner, MFOP. That's what we share with the whole world.
We spoke earlier about this on the podcast, or off the podcast actually, is you said everyone should have a family office. Like you get a family office and you get a family office. I'd like to go into, briefly just what are the tools that make up a family office from a legal standpoint.
Yep.
And, we don't have to go super in depth, but enough for people to be curious about it and then also reach out to you guys because, you know your stuff. So I'd like to hear more. Yeah,
for sure. So I would think, I had this mindset of, a family office, you have to have $500 million or a minimum
elite.
Single family. It's elite. It's just, thing that it'd be awesome to be a family office. Well, what happened was in 2017, the Lender Bagel trial, where this family was operating like a family office and they were, using the tax benefits that come with a family office, which are, well, first of all, what is a family office? Okay. Family office is a one-stop shop to manage my family's wealth. And now a single family office, like the guys in the families that have 500 million, right? They have a whole team of trusted advisors that oversee, finance and accounting, all the bookkeeping, all the taxes, all their investments, all the lifestyle, right? That's a big one. Legacy, like tax and estate. And family offices have a different perspective, which is they're looking at stuff minimum 10 years, 20, 30, 40, 50. That's their scope.
Okay.
So imagine, okay, that's unique, right? 500 million, they have 500 million, but I want to operate like a family office. Can I get the same write-offs and tax benefits? Okay. And so the answer is yes, you can. Now, what is a family office? On the more of the entity structural
standpoint.
Yeah, you have a management arm, and then you have your investment arm. The investment arm is funding the management arm. Okay, and this entity over here, you're going to have 0.9% is going to be owned by a separate entity. Now, why this is important? Because the family over here, management arm, if I'm going on a trip and I'm going to go on this trip and I'm going to go look at,
Real estate.
real estate, I'm going to take my family with me.
Heck yeah.
So now my board of directors, we're doing business. And we're also going to go to dinner that night and we're going to talk about the properties we just saw. And we're going to discuss, okay, should we buy this? Should we, what should we do here? So now you're able to, that just became a business event through the family office. 'Cause people always talk about this, like I can do that, but it's truly through the family office structure that you can do this. And so that's why that's another thing you can add to the list is family office structure. If I'm a business owner, all right, I should be operating like that, especially if I'm going to be having an exit, because I need everything. The family office is going to say, okay, we're having an exit. All right, are we good on the tax side? Are we good on the estate side? And then what about the next 10, 20 years? What's happening there? And your family office is going to look at it and they're going to line it all up and then say, here you go, family. Look, what do you think about this? Now so for us, we do, at my family office partner, it's family office services. So you can choose what things you need because not everyone will need everything.
Yeah.
I don't need a private jet, but I do need help on the tax and estate. I do need help on the bookkeeping side. I need help on, we can help line these things up because what I personally want to do is I want everyone to be able to use the best, wealth management structure in America and have everyone on that track to get there. But you need your trusted advisors. You need people to come in. So that's why we have the model of a la carte. Let's start with tax and estate. Okay, let's do that. And now, just so you know, we're going to go through all this stuff and have this stuff so you know what it could look like if you wanted it. But right now, you're going to know it's there, but you don't need it yet. Okay, what's the next thing? It actually helps keep you. Truly, a family office is always thinking begin with the end in mind.
Yeah.
Right? End in mind is literally how they operate. So I don't know. I'm a big fan of family office structure.
Well, I see you, obviously having experienced it yourself, but also now wanting to share that with other people, who are in business, because I think it's always this end in mind mentality. And you had experienced an exit right as a newly drafted NFL athlete. But then you're seeing a lot of other people that are going through the same things. And I would suspect, based on your desire to help people, because really that's what it comes down to. Mm-hmm. It's like you don't want to see people suffer and you want to see people win. And being able to, have these structures in place really help people win. So I love what you're doing, man.
Oh, I appreciate it. It's the most fulfilling thing. And that's one of my pillars, right? I'm not going to do anything if what I do, what I'm going to spend my time on away from my family, it better be helping people. Mm-hmm. And it's all about, providing the education, the value. Like, it doesn't have to be everyone. I don't know. I feel like in the business world, it can get a little scarce fast because dollars are attached to everything. Mm-hmm. And my mindset is, no. We're going to be extremely abundant and we're going to give. And everything I do is, based on, can I help this person achieve
It's like the law of reciprocity goal? In essence.
Oh, yeah.
You just keep doing it.
Just keeps going. Yeah. And you want to be flexible. That's why, the family office services business, extremely flexible. We go work with other family offices. We go work with CPAs. We go work with other financial advisors. And they're just tossing stuff over to us, and we're just doing it for them. Because it's no big deal. Like, we want to help. And so that's why that business is structured the way it is. Because personally, like for me, even when I was in the NFL, guys were just hitting me up asking me for,
advice.
like the advice, but also like deals for this, tax help. I was just sending people over.
Yeah, I can imagine everyone's coming to you, especially that you're starting to really understand this, and it seems like you have an extreme curiosity for learning in the space, but also that desire, that heart to be able to see other people through and provide them with value. I've certainly listened in today, and I think you've provided us and the audience for massive value. Is there any lasting kind of comments or words of advice that you'd want to give everyone out there?
What comes to mind right now, I actually have been thinking about this a lot lately. I just posted about it on my LinkedIn. But in sports, I kind of go back to sports a lot, right?
Mm-hmm.
That's my field. In sports, who takes care of the rookies? The veteran players. All right. I'm Polynesian culture. Who takes care of me? My older cousins and uncles and aunties and everyone. Okay. In business, it's the same way. Like, everyone needs to be giving. Mm-hmm. If people were to give more in business, they will see so much. And also, not even, people think it's like, I'm going to see a lot of money if I give. And it's like, yeah, I know that, but guess what you're going to see first? Your mindset that you take with you everywhere changes. And that's where the money follows. And so if you can change your mindset from, taking and everything's a transaction to giving, that's championship culture. Mm-hmm. What can I do to help this person win? How do I help them? I'm going to show up. I'm going to help make this person better. And so I think, that's probably the last thing I want to say is that's a culture that is not, you're not born with that culture. It's built. And so you have to be able to give.
Because as a human, our instinctual nature is more selfish in nature, and that's why you have
Survival.
to fight. You have to fight against, right? Because you have to find ways to support yourself. But then if you think outside of yourself, that's really where flow begins. And we're wanting as individuals as well as business owners to achieve flow that will allow for us to continue to impact the communities that we serve. And this goes all the way back to why we do what we do in both business and life. And I think that's the challenge today for you guys is look at who you are, why you do what you do, both in your business and life. And, obviously we've covered so many different things and we've got different strategies that you've presented us with today. I believe it's extremely valuable. So what's the best way to get a hold of you to be able to book a call or get to know you guys more?
Yeah. I would probably say, I'm all over social media.
Okay.
Not all over, but I'm on it. I'm on LinkedIn, right?
LinkedIn.
Look me up, Bronson Kaufusi. I have a little football by my thing. And then Instagram as well. Happy to help.
You guys have any website for your business?
Yep. So there's myfamilyofficepartner.com.
Okay.
You can look up there if you're looking for other, something specific like what we talked about. I can connect you with anyone that you want.
Okay, good. Yeah. So you're going to be the resource center, and what we'll do for you guys out there, we'll just put the link to myfamilyoffice.com in the comment section below. And you guys can go there if you like, and then also just reach out to Bronson, also their partners. They'll be sure to help you out. But, lastly, we just want to say thank you for joining the Acquisition IQ Network as a founding member. And we're excited. We got a national tour coming up here soon, and we're going to be canvassing the entire nation with learnings of acquisitions as well as strategies, and just like what you were talking about. I'm excited to have our event here in Salt Lake City, and I know you guys will have a position there too. So we appreciate that. But guys, if you want to learn more about Acquisition IQ or the network, just go to acquisitioniq.co. If you want to learn about the tour, just do /tour. So acquisitioniq.co /tour. That'll take you to the national tour. And if you want to learn more about AquaCon coming up, it's in September on the 3rd in Salt Lake City. We should have about 400 people out for that. Excited for that conference. It goes over buy, sell, fund, team integration, pre and post merger. So there's a lot going on there. But other than that, thank you so much, Bronson, for joining us today on the Acquisition IQ podcast. If you guys like today's episode, please make sure to subscribe, comment, and share with your friends.